Good morning. It's Jeffrey Christian of CPM Group. It's about 10:20 in the morning here in New York on Friday, the 20th of June, the summer solstice. I'm going to continue the discussion of facts and fictions. This is something that is an outgrowth of what we did presentation on June 11th here in New York, expanding on some of the truths and stuff. On Tuesday, we focused on the gold portion. Today, I'm focusing on silver. And then the next time, we'll finish it off with talking about the US dollar and treasuries going on. Before I do that, I'll talk a little bit about the markets, and I'll make some clarifications and an observation before I get into silver facts and fantasies. Gold prices were trading around $3,379 earlier this morning. They're off sharply over the last couple days. The average year to date is $3,072, and you have to bear that in mind because the price of gold, it started the year at $2,661. It got up to $3,507. That's a $850 move, approximately. It's an enormous move in the gold price over the last. That was January through April. Since the second half of April, it has been trading above $3,200 with the exception of a couple days. So the price is very high. It's at record levels. It has come off from that $3,500, but gold had never been above $3,000 until the second half of March of this year. So we're in unprecedented territories in terms of the gold prices. We've seen the price come off, as I said, last couple days, and today you see gold, silver, platinum, palladium, copper, and other commodities off while the stock market's up. And I think that part of this is a reaction to the FOMC comments and the dot plot and the projections for economic activity that came out on Wednesday. Part of it also is just sort of a calming down after, there's so many risks and there's so much uncertainty and there's such high anxiety, not just in the financial markets, but on a global basis with people, corporations not knowing what to do, what's going to come next. But if you look at what the Fed said, and no one, I think, was surprised that the Fed did not change interest rates, raise them or lower them. And the Fed's comments basically were, hey, we're in a halfway decent position right now economically. Economic activity is still, it's rising slightly in some places. It was off a little bit in the first quarter. It's a little bit better now. Employment is hanging in there. There are clouds on the horizon. And the Fed has reduced its projection for total GDP this year, real GDP, by about 39%. And it's reduced its projections for real GDP in 2026 and 2027 significantly as well. And it has also indicated that it probably will be lowering interest rates yet this year, in the second half of this year, and lowering them further in 2026 and 2027. That suggests that the Fed is looking at the economy the same way the CPM Group and many other economic research groups are looking at it. And they're saying, okay, we're halfway decent right now, but the clouds are there. We're headed toward, if not a recession, very low growth. And we're going to be lowering interest rates because we're going to be seeing much slower economic activity than we had been anticipating or than we've seen in the last few years. And in that kind of environment, you've seen people back off of precious metals a little bit. It's still very high. Gold's still very high. It's at record levels. Our expectation is that it will rise further. Before that, could it fall down as low as $3,200? Absolutely. I mean, that's been the low for the last 3 months. Could it fall to $3,000? Sure. We've never seen $3,000 prior to the middle of March. We're not thinking that it'll fall that far, but it is possible depending on how things shake out. Our expectation is that the price will continue to move sideways in a volatile fashion over the next couple months, July and August, but then probably start rising to new highs later this year. Later this year could come sooner, depending on what happens economically and politically. Silver prices have also risen. They've risen very sharply this month in June, I mean. They've come off a little bit over the last couple of days. They were $35.97 earlier this morning. That's down from $37 a few days ago. You still have 418 million ounces of open interest in the July COMEX futures contract. That becomes deliverable in 7 trading days, right? So there's going to be a massive roll of 418 million ounces out of July into September. You already have 75,000 contracts representing, more than 300 million ounces of open interest in the September contract. That's mostly metal that has been rolled from July into September. If you go back 3 weeks ago, the July open interest was more than 600 million ounces. So you are seeing that roll. That's what happens with hedges. And you'll continue to see that roll. That could have the effect of driving prices higher over the next 6 or 7 trading days. Once you get into July and the roll is behind us, you could see the price back off some. But given the global political and economic anxieties, we don't see the silver price falling below $30 for sure. Well, not for sure, but we don't see it falling below $32, let alone $30 over the next couple months before rising further. Platinum and palladium prices have risen very sharply. Platinum broke out of that range that it had between $900 and $1,050, and it's gotten up. Yesterday it was over $1,300. It's about $1,254 today, off along with gold, silver, and other risk hedges assets. We think that the price will stay high next week because July is an active month and you'll see the July roll. But our expectation is that the price comes back down and trades below $1,200, probably going back into that range below $1,100 over the next couple weeks, beyond next week. Palladium also has risen. It stayed within its recent range, and our expectation is that it will continue to raise. Now, the clarifications, I'm not sure how we're going to do this with my video picture there. The black lines here are something that somebody has written a couple times as a comment to these videos, and I decided to deal with them because maybe other people are as misbegotten as this guy is. Now, first off, it calls me brave for promoting the paper futures markets. I don't promote them. I use them. I understand them, and I try to explain them to people who clearly don't understand them. But the futures markets have a very important role across the economy, and they're very important. And if you know how to use them, you can use them very well. If you don't know how to use them, you'll lose money. It's like dynamite. You can build bridges and high rises in society with dynamite, or you can blow your hand off. So if you know what you're talking about, you understand that futures markets are very important and integral to modern finance and modern economics and modern living. If you don't, you're going to rail against them like some deranged Spanish guy who thinks that windmills are actually crusaders to be fought. His next sentence was, what's your thoughts on the ECB stating that the LBMA came close to defaulting on gold deliveries since January? And what I think is that the ECB, somebody at the ECB, had gotten bad information or misunderstood. First off, the LBMA is a industry association. It doesn't trade gold stuff, so it wouldn't have defaulted. London banks that trade in London that belong to the LBMA could have been in that position, but they weren't. The London banks were not close to defaulting. So when we heard the ECB say that, we said, okay, they got bad information. Now, next sentence he had, is this an important signal that the paper derivative shell game is ending soon? And I say that game will never end because it doesn't exist. And a non-existent game cannot end. Logic 101. If you think there's a game, you don't know what you're talking about. It's that simple. It's that simple. Those who know about the silver market know this. Those who don't know about it succumb to the fear of magic potion people who want you to be afraid of everything and buy gold and silver. Can the rehypothecated gold and silver futures contracts of the LBMA COMEX still set the stock price to hide real inflation? Now, this question is great because it's a ball of misconceptions. First off, non-existing rehypothecation. There are rehypothecated ounces, but it's not what you think. None of the silver or gold on the COMEX is rehypothecated. If you think it is, again, you don't know what you're talking about, and you're getting your information from people who are lying to you because they want you to be afraid. Second, no one, other than the people who do not know about economics, finance, gold, or silver, no one else thinks that anyone could look at the gold and silver prices to determine whether or not they should think real inflation is high or low or hidden. No one looks at the gold price. No one who knows what they're talking about, no one who knows economics and finance says, oh, the gold price and silver prices are rising, inflation must be a problem. Intelligent people go to the store, buy a car, look at a house, buy a suit, and say, oh my God, inflation is rising. That's how you know whether inflation is rising or falling. And with the exception of the gold bugs and silver bugs, that's where people look. Most people, 99% of the people in the world, do not say, oh my God, gold and silver is rising or falling, inflation is rising or falling. So it's just an incredible ball of misconception. Now, does China and Asia now set the price for precious metals? China and other Asian markets and economies have been gaining market power for more than 2 decades. I say 2 decades here in writing, but it's more than 2 decades. You can go back to the 90s when China was in its early stages of its expansion, which really began in the late 70s. But the Asian tigers were already roaring and had a tremendous amount of money and wealth in primarily gold, the US dollar, but also gold and silver. China and these countries have been gaining economic power and market power for decades. They do not set the price for precious metals, but they clearly have a very strong influence in it. It's very funny because you'll hear people say, oh, the silver market was slammed overnight when it was thin. Well, overnight for you is actually the trading day in Asia, and it's not thin. There's a lot of trading that goes on in Asia. It's not a thin market. But they don't set the price of precious metals. They have a much more influence than they used to have, and that will continue to grow. So are we seeing the slow death of the COMEX LBM pricing function? No. We're seeing globalization of the markets, which is at risk because there are anti-globalization forces everywhere. And that's where it's going to go. So those are some clarifications. Hopefully some people will say, oh, okay, I don't have to be so fearful. In the early 1990s, there's a company, they've changed names, they've merged and stuff like that. There's a company that produces most of the scary newsletters and videos about gold and silver. So when you start looking at who's paying for these various people who post things on the YouTube, oh, the gold market's going to collapse or the gold market's going to go to 10,000, blah, blah, blah. Most of those people are financed and managed by one big company that sells stuff on fear. They came to us in the early 1990s and said, hey, CPM Group, you guys are really great. Maybe we should be doing back then a newsletter on precious metals that CPM Group would write and we would market for you. And so we started talking and they said, no, we can't do this. And I said, why not? And they said, you sell your research and analysis and information based on greed. People who want to make money or keep their money. We sell our newsletters on fear. And this is a quote. He said, if you want to write about how Hillary Clinton, as the first lady, is going to make us all use the same bathroom, we can market your newsletter. But if you want to write about what the supply and demand of gold and silver are and what it means for the price, we can't sell something based on the idea that investors want to make money. We only work on fear. That was 1991, and they're still doing it. And fear is a terrible thing. I mean, Mr. Buffett has spoken repeatedly, do not invest based on fear. The U.S. Army has groups of special training specialists that teach special forces people to meditate because the meditation will slow the transmission of information to the amygdala, which is where fear resides. And they try to teach their special forces people to react not based on fear, but based on knowledge. It's all microseconds, but it happens. You've got to go for knowledge, greed, for want of a better word, as opposed to fear. Now, this has nothing, well, it has something to do with precious metals, but it's the same thing. Take a look at these pictures. On the left, these are cops dressed like soldiers on a armored vehicle driving through the streets of Minneapolis and Minnesota, suburban Minnesota last week, looking for this fellow who shot a couple state senators. Yeah. On the right is an actual undercover detective sitting in a car, dressed like a civilian, looking for somebody. I don't know if you've ever gone hunting, either for an animal or a bird or a person, but if you really want to find somebody, you're going to act like an undercover detective. If you don't want to find them, you're going to drive around on suburban streets in an armored vehicle with a bunch of toy soldiers hanging off the back. So if you say that and you say, okay, well, let's assume some intelligence on the part of people in the police departments around the world, what are they doing? Why are they doing this? What are you seeing? They are doing this to generate fear. That's what you're seeing. It's the Ministry of Fear, with all due respect to Graham Greene. When I was a young man, if you had a warrant for a criminal and you knew where he lived, the policy of police departments across the country was to have an unmarked undercover detectives and police officers sitting in a car outside that person's house or place of work. And when that person left their house and was walking on the sidewalk, you would arrest them. At some point, they shifted that. And they said, okay, no. What we're going to do is we're going to come in with toy soldiers dressed in armor and a battering ram, and we're going to go into their house at 4 a.m. with guns drawn and shoot anything that moves. Right? Why did you shift? Because back then in the 70s, the dicta was you never want to enter a house where there's a known criminal because you're on their territory. You don't know what's inside there. You don't know who's inside there. Wait until they're outside in public and then grab them. That's the safest way for you, for them, and for bystanders. Why did they change that? Right? Also was a dicta back then that if you saw a criminal, do not engage in a high-speed chase unless someone's safety or life is at risk. Otherwise, say, okay, there's a criminal and this is the car and this is the license plate, go after them. That's shifted. And now you have high-speed chases because someone has a taillight broken out, usually often ending in disaster. Why are we seeing stuff like this? Because certain people would like to see a population that is full of fear and is docile. It's true in the government, and it's true in people who sell precious metals. In other words, it's a much bigger problem than the precious metals market alone. So let's talk about silver facts and fantasies. Here are some facts. Silver supplies exceed fabrication demand. There's no shortage of silver needed to make things in the world. Investors are buying more silver, but it's not the hundreds of millions of ounces that you hear from promotional agencies. It's much lower. It's up this year, and we think it's going to be up again next year, sharply, but it's not hundreds of millions of ounces. And many other investors are continuing to sell silver over the past 2 years and now. So if you go on YouTube and you look and listen to some of the silver retail dealers, they're having problems because no one's buying silver from them. They're selling it back because they've held it since 2011 or 2012 or 2021, and they had bought it at higher prices, and now they're going to at least recoup their losses, if not maybe make a profit. And you have coin dealers talking about running out of cash because they're buying so much silver. Other dealers are selling silver. Other investors are buying silver. Institutional investors are sitting up and paying attention to silver now for the first time in a while. But a lot of retail investors are actually selling it. These are the facts. Sorry about it, but I'm not selling precious metals to you. I'm selling information to people who understand the value of information. Some of the fantasies, silver market's in a deficit. No, it's not. The world is on course to run out of silver in the next few years. Above ground inventories are falling. Mine production is running out of metal to mine. All of that is fantasy. The solar panel industry use is rising. It's not skyrocketing, and it's not going to use virtually all of the newly refined silver within a few years. It's around 200 million ounces a year of new silver being purchased by the solar panel industry, and it will continue to rise, even though some governments are cutting back on their tax incentives to switch to solar power. But solar power makes economic sense. I got solar panels several years ago, and I haven't paid any for any electricity since. That makes economic sense. Solar power will grow because it makes economic sense, even in an absence of government subsidies. And silver is not a strategic or critical metal. Its military applications are measured in tens of millions of ounces a year, not hundreds of millions of ounces a year. Let's run through a few charts here. These are CPM Group supply and demand deficits and surpluses. Surpluses are periods when investors are net buyers, bidding the price away from fabricators and encouraging both miners and scrap recyclers to produce more. And you can see that those surpluses historically correspond with rising silver prices. Deficits are periods of time when fabricators want more silver than miners and scrap dealers are recovering from new supply. And the price is being depressed by investors selling silver. And you can see that long period from 1990 to 2004 when you had about 2 billion ounces of silver sold by investors, and the price was basically flatlining between $3.50 and $5.50 for about 15 years. As investors started saying, wait a second, if I wait until tomorrow to sell my silver, maybe the price will be a little bit higher. And you saw that start to emerge after 2000, 2001. They started selling less silver on a net basis, and the price of silver started rising. And then they said, whoa, price of silver is rising. And now new investors are coming in as buyers, which started to emerge around 2005 and has continued basically since then. Got very low a few years ago, but it's rising now. So that's where we are with the market. We don't have deficits. We have prices rising based on investment demand. But investment demand is running 100, 150 million ounces. It's not 3, 4, 5 million ounces, 100 million ounces, like some people say. So the reason why silver prices are rising and will rise sharply at times is because of stronger investment demand. It's not because of strong fabrication demand. It's not because we're running out of mineable silver. It's not because we're running out of refined silver sitting around above ground inventories. It's not because all the silver in Europe and North America is moving to Asia. There's more refined silver stacked up in North America and Europe today than ever before in the history of mankind. Depositories are building new facilities to hold more silver day after day, and they have been doing that for several years now. And it's not because the dollar or the treasury bond or the global economy are collapsing. It's because investors are looking at the state of the world and they're saying things are bad and they're going to stay bad. Maybe get worse. The disappearing deficits. You can see, people who throw in dummy variables for investment demand say, oh my God, there's a 261 million ounce deficit, 200 million ounces, 180 million ounces. You take out those investment demand figures, 337 million ounces, 240 million ounces, 200 million ounces, 284 million ounces. You take out that investment demand dummy variable, and all of a sudden you have surpluses in the silver market if you're doing your supply-demand calculations properly. And those surpluses are pretty similar to the ones that CPM Group has. Excuse me for a second. Again, we're not running out of above-ground inventories. We have more above-ground inventories than ever before, 6.4 billion ounces, most of it held by investors. Investors are selling silver. They're probably selling, tens of millions of ounces of silver. It's a small fraction of the silver they're holding. Most investors are holding their silver saying, hey, I feel really good. I know my personal net acquisition price, I used to keep track of it, but it's someplace south of $10. It's probably closer to $5 or $7 an ounce. So I'm very happy that silver is now $35 an ounce, marked down from $37. I'm very happy. And most people who own silver are happy. And insofar as there are several hundred million ounces in here, in that yellow implied unreported stocks, there's a couple, maybe more than 100 million ounces that's owned by banks and trading companies that own that silver and sell it, lease it to mining companies, smelters, refiners, fabricators, semi-fabricators, companies that use it in financial instruments. And those banks make their money by charging an interest rate. And the interest rate is applied to the price of silver. So at $35 an ounce, the banks are making more money now than they were at $28 last year. So bullion banks are not about to go bust because of the high metal prices. They're about to report record earnings on their gold and silver trading operations because they make money. They make more money when the price is high, and they have an economic disincentive to try to suppress that price. Duh. Silver solar demand, I talked about it earlier. We saw a big increase in 2023. A lot of that, about a third of the silver that was bought and used in manufacturing panels, solar panels in 2023, went into inventories. Those inventories have been being used in 2024 and early 2025. And so you've seen a continued increase in the amount of silver being bought by the solar panel industry, but it's a much slower growth, representing increases in demand. And it's been a little bit slowed down by using the the panels that were manufactured in 2023 but not sold in that year. The solar panel industry has expanded rapidly around the world. Governments everywhere say we need a solar panel industry. So you're operating around 60% capacity right now, which is not a good way to generate a profit as an industry. And projections are that capacity utilization will probably fall to around 50% or lower over the next few years because of the increase in panels. And insofar as governments are doing this because they're worried about relying on China for solar panel supply, they're missing the point that about 90+% of the components in those solar panels are still bought from China. Interesting. That's all I have for now. Take care. I'm sorry I spoke as long as I did, but there's a lot of ground to cover, a lot of food for thought on the weekend. Think about fear, how to avoid acting on fear. Think about greed, for want of a better word. Think about trying to save money, make money, and keep your money by having precious metals. Not because you're afraid of the world coming to an end, but because you're concerned about everything that's going on in governments, in politics, in the economy, in large corporations, squeezing out small businesses, in small towns and large cities having losing major industry to large corporations, in deglobalization, which is reducing overall economic growth, in the divisions that are being rent throughout society by fear-mongering. Think about all that stuff and how to avoid it, and have a good weekend. Take care of yourself, take care of those around you, try to do something good for the world, and quite frankly, thinking about those issues related to fear-mongering and how to avoid it, that's something you could do that'd be really good for the world, as well as good for yourself. Take care, and I'll talk to you next week.